what really attracted me, in my career is not selling price. I'm more about selling expertise, knowledge, focus. The LOs that are embracing in non-agency and non-QM, they're actually thriving in a really challenging market. In the non-QM space, where I would focus and I would advise my clients as a strategic advice, I would say focus on self-employed borrowers and focus on investors. Whether it's non-QM or equity or RTL, like having a full suite of products to serve your borrowers and their needs. Today, I'm in the non-agency space, right? And that, to me, it's exciting, and it allows you to bring a lot of value and to your clients to help them grow their business in a challenging environment.
We've been doing this podcast for over 20 episodes now, and we've brought on top mortgage professionals to give you insights that help you grow your business. And we're going to keep doing that. There's just one favor I ask of you. It'll mean a lot to us if you subscribe to show your support. Now back to the episode. Hey everybody, welcome back to the Loan Officer Playbook, the podcast where we talk about real insights and strategies in loan origination. Today's guest is a guest that I've been looking forward to for a really, really long time. My guest today is Tom Davis. Tom is the Chief Sales Officer at Deep Haven Mortgage. And catch this, they are actually the pioneers of the DSCR loan, and they're doing a bunch of things in the non-QM space. They've pioneered a lot of products in the non-QM space. Tom is super knowledgeable in this space. Tom also co-chairs the MBA's non-agency committee, and I'm super excited to have him on the podcast today. Welcome.
Thanks, Mike. I appreciate you having me.
Awesome. Tom, let's get into your background. How did you get started in mortgage?
Yeah, I early in my career, I have a degree in finance, and I was working for a company, and they said, hey, we're going to start a mortgage division, and would you like to participate in it? And so they asked me to be a leader. And so this was pre-financial crisis. I decided, I'm like, absolutely. And so we grew it from like 3 people to 90 people in like a year. And then it was more retail based. So I started as an originator early on. And then a buddy of mine said, hey, have you ever thought of being an account executive on the wholesale side? And I was like, no. Can you tell me what that involves? And, what's the pay range? And so at that time, going back to pre-2008, I said, fax me your income statement, your W-2, and he faxed it to me. And the next day, I had an interview with his boss, and I was hired, and I became a wholesale account executive. And so throughout my career, I've been in, originator, wholesale. I've been correspondent account executive, and throughout my career, I've managed teams and been fortunate to have just great mentors and be part of great organizations and work with great people. And so, I've been very fortunate to grow in my career, and it's all because of our people and the things that we do as an industry. So, so anyways, I got started early, been in, pretty much business to business sales all my life. And, what really attracted me, in my career is not selling price. I'm more about selling expertise, knowledge, focus, and like, how do I differentiate myself against my competitors? And, like any other professional, whether you're a doctor, you're an attorney, a wealth advisor, if you're really good at what you do and you have expertise, knowledge, and focus, people will line up to do business with you because of that, right? And so throughout my career, I really focused on how do I provide value to my clients? How do I become their first call? How do I help them grow their business? How do I help them from taking on less risk? How do I help them, with their strategic, strategic plans, right? Whether it's product expansion, whether it's marketing, whether it's, doing on-site visits and helping present to their referral partners and really being hands-on. And I think that's, whether you're an originator or you're in business-to-business sales, if you think about the customer and you treat them like you want to be treated and you go above and beyond and add value, then you're always going to be highly successful. And, I've had some great mentors teach me a lot of these things. And so today I'm in the non-agency space, right? And that, to me, it's exciting. And it allows you to bring a lot of value and to your clients to help them grow their business in a challenging environment. So anyways, that's a little career background about me.
Yeah. So once you went wholesale, you never went back. You're just
That's
like
right.
you're
That's
just
right. I went wholesale, and then I just like the wholesale, hand-to-hand combat, talking to the broker, structuring deals, just getting in the office, talking shop. It's. I really like that hands-on approach, right? And working with the folks in their shop and the other LOs and helping them grow their business, right? And so I just love what we do, and helping clients and helping them grow their business. And if you do that, you become partners for life. If you can help someone grow their business and you can help them expand their business and you're hands-on, like I've built relationships throughout the country. Not, I live in South Florida, but throughout the United States, right? And all the way to Alaska, to New York, and to Gillette, Wyoming, and rural America. I've been very fortunate to build a network and in our industry.
do you think relationships in the business last longer in wholesale versus retail?
In wholesale versus relationships, wholesale versus retail? Well, it's interesting. That's a good point. I think absolutely in the wholesale side, you're going to have a stickier relationship in business to business sales. And here's a data point that's really interesting. So retention recapture rates in the United States, right, for originators, mortgage loan officers, are only about 30 to 35%. So when a borrower does a loan with a loan officer, the data shows that 65% of the time, close to 70% of the time, that borrower, when they do their next loan, they don't go back to the same loan officer. They're going somewhere else. The majority of their time, they're going to the servicer who's servicing the loan, because the servicers are aggressively marketing to those loan officers or to those borrowers as soon as they buy the loan. Right? And so that's why non-agency products, right, and whether it's non-QM or equity or RTL, like having a full suite of products to serve your borrowers and their needs, right, is important, because it allows you to stay engaged with them. It allows you to provide value. So if you look at loan originators today, whether you're a mortgage broker, a loan officer, a mortgage banker, retention rates are really not that great, right? And so the best loan officers, the best mortgage brokers, mortgage bankers, the ones that really are, are best in class, they're the ones who have a focus and a strategy around borrower retention and borrower recapture. Right? It's like any other business. Think about a restaurant, right? If I had a client that came into my restaurant and 65% of the time they don't come back to my restaurant, they go down the street and they go somewhere else, like that's a hard business. Like you have to be in the business of like, how do I get these people to come back in, right? Like, so if you're a mortgage broker, a mortgage banker, whatever the case, if you become really good at getting borrowers to come back to your store, right? Not only are you going to have higher income levels, right? But your enterprise value, the value of your company is going to be worth more. If I'm going to pay to acquire a mortgage broker or a mortgage banker, in one company, 80% of the time, those borrowers don't come back to the store. And there's another company that, 80% of the time they do. I'm going to pay a premium to acquire a company that actually has higher retention and recapture rates, right? And what we're seeing is originators that actually have a full suite of product and are subject matter experts and are known for expertise, knowledge, and focus, and are tied into not just the realtor community, but the loan officers, the realtor community, but the investor community, the self-employed borrowers, and really focus on these areas and provide value. They're the ones who actually have the highest retention and recapture rates. They're being proactive and strategic about their business instead of being the opposite, right? Being reactionary. They're taking a strategic plan. How do I grow my business with self-employed? How do I grow my business with the investor community? That's 30% of purchase transactions last year. How do I get into builders, developers? How do I work with, self-employed people, high income, high net worth? And having non-agency allows you to do that, right? So, and the ones that, it gives you a competitive advantage in the marketplace. And if you don't have these type of products, right, then your retention rates and the recapture rates are going to be suboptimal, are going to be lower than your competitors.
Yeah, we actually have seen some LOs that were primarily doing agency deals, And
Yeah.
now about 50% of their deals are non-agency deals.
Yeah.
And since you guys are knee deep in the wholesale space, non-agency is actually one of the fastest growing things in the wholesale space right now.
Yeah.
And so if there's an LO who does, let's say, 90% agency business and wants to, diversify and start doing non-agency business, where do you recommend they start?
All right, so in non-agency, there's three different markets, right? There's non-QM. It's going to be 150 to 180 billion in 2026. There's equity, which I think is a generational opportunity. That's going to be about 150 billion, like your closed-end seconds and HELOCs. And then RTL is about, let's call it 50 billion. And RTL stands for Residential Transition Loan. It's only for investors. And that's your fix and flip, bridge, ground up construction. We have this undersupply housing in the United States of about, let's call it 5 to 10 million homes. And we're going to have this undersupply for the next 10 to 15 years because we've had massive migration and we have a shortage of housing. And so that allows you, those products allow you to work with builders, developers, or real estate investors and get further upstream to help bring new inventory to the market or rehab uninhabitable properties and bring that to the market. So non-agency is about a $400 billion market in 2026. So let's call it 25% of the overall market. Those are the three segments. In the non-QM space, where I would focus and I would advise my clients as a strategic advice, I would say focus on self-employed borrowers and focus on investors. Self-employed borrowers in the United States, there's 18 million of them. We have a very entrepreneurial spirited country in the United States. People come here because we have a great infrastructure and laws and capital to allow people to go into business and grow their business. So there's actually more self-employed people in the United States than there's veterans, to give you an idea. So self-employed people, high income, high net worth, they go to a CPA accountant, they leverage the tax code to write things off, right? So they don't show a lot of income. But if you look at the cash flows on their personal bank statements or business bank statements, right, you're looking at a forensic view of their cash flows or debits and credits, right? It allows you to really take a really forensic view into their income and cash flows. And that's I would say that's about 40% of non-QM, right? And once again, high net worth, high income, well-heeled borrowers, those are the borrowers that you want to work with. If you're only doing agency, it's hard to qualify those folks because they have a lot of write-offs. So this allows you to serve the 18 million self-employed people in the United States. Yeah. The other area in the non-QM space, I would say, is investors. There's about 19 million investment properties in the United States that account for 49.5 million doors. Last year, 30% of transactions were investor transactions. So if you're an LO today, what I would do, one of the takeaways if you're on this podcast is go back to your 2025 production and see if 30% of your business was investor transactions, right? If it wasn't, then you're under-indexing the market, and more than likely why you're under-indexing the market is because you don't have a full suite of investor solutions and you're not focused there. And the folks that are focused in the investor space, they're more than 30%. Michael, some of these guys are 50, 70%. I have clients that don't even do consumer purpose. They only do business purpose, 100% investor deals, right? And what does that look like, right? And what's the opportunity? So the builders, the developers, the fix and flippers, right? Those are your investors that you want to focus on. And the products that you need there are your DSCR, 5 to 9, right? A second lien DSCR, closed end, maybe a DSCR HELOC, so the investor can have a line of credit to take cash out, rehab properties, right, etc. If savvy investors are not going to refi cash out of their investment properties, the cash out game today is equity, second liens. They're going to take equity out to go do more deals. They're going to take the equity out potentially to start a fix and flip. Maybe potentially take money out to start a ground up construction, right? If they're savvy enough, right? And so those are the products that I would say originators should focus on in the non-QM space is definitely self-employed and investors. What I really like about the investor is, unlike a consumer that might buy a house one out every 5 to 7 years, the average investor does 5 to 7 deals a year. So if you have a full suite of investor solutions and the investor that you're working with doesn't have to go anywhere else for any other products, and you have an arsenal of products and they could just keep coming back to that, you as a loan officer, think about the opportunity. You could actually, the investor could take out equity of their home, of their investment property. That's one deal. take that money out, start a fix and flip. That's another deal. And then when it's time to do the end loan for the DSCR or the consumer, that's another deal. You get 3 commission checks on one deal. Let's say you want to do a ground up construction. You could actually help the builder get financing on the land, 1 commission check. Then they do the ground up construction up to 15 million. That's what we offer here, right? That's a 2nd commission check. And then when they do the end loan for the consumer, or if it's an investment property, a DSCR, the takeout, that's another deal. That's 3 commission checks on one deal. And once again, the average investor does 5 to 7 years, 5 to 7 deals. Mm-hmm. So I think that those are the products where you want to focus on. And then the equity space. Equity is, look, there's 35 trillion in the United States in equity. In the United States, there's 24 million millionaires, and 75% of those millionaires are millionaires because of their equity. And so tons of equity rich. These borrowers need to renovate their homes because they're not moving because they're stuck in lower note rates, right? So they're renovating their home because on average, the age of a home in the United States is on average 40 to 50 years. So people are renovating homes because they're staying put. People are consolidating debt because we have 5 trillion in credit card or in consumer debt in the United States, whether it's credit, card, auto, student, right? And then there's investors are tapping into their equity because they don't want to cash out of that low interest rate. In fact, self-employed borrowers, right, are tapping into their equity to fund their business or taking cash out to do just entrepreneurial projects. And then you have other life events, whether it's going to school, kids going to college, kids get married, parents getting older, long-term care. And what just a great call, Mike, to just call to your past clients and say, congratulations on your equity, congratulations on the low interest rate that we got you. How's life? Are you looking to consolidate? Are you looking to renovate? What are you looking to do? We have all this equity, and it allows you to engage with those clients, right? So these products allow you to tap into new referral sources, tap into your existing clients that maybe need to tap into their equity, allows you to tap into the self-employed, high income, high net worth. So, it allows you to really, take a more strategic approach in today's environment instead of just chasing a purchase with the realtor like that only buys a loan or buys a house every 5 years. Make sense?
If I get a call like that, it's like, hey, Michael, as an investor, I have built up equity in my home or some of the investment properties that I have. I am taking that opportunity immediately.
Yeah.
And I think these are some of the opportunities that LOs have now. I think it's actually like a blue ocean opportunity.
I love that. It is a blue ocean strategy. Absolutely.
Yeah. On Addy, the product that we are working on, we have 1,000 weekly active LOs and growing, and a lot of those have come from the last 3 months. And last month we did about 19,000 loans processed.
Wow, congrats.
Thanks. The LOs that are pre-approving the most deals are actually LOs that are doing more non-agency business.
Yeah.
We had one on the podcast last week in Connecticut, and then he has this YouTube channel. He did one video, DSCR for Dummies. And then he said that one video has returned 20 deals. So the video only had like 2,000 views. 20 deals came from that one video.
It's unbelievable. Unbelievable. Yeah, I mean, if you have these products, like I would recommend LOs to really embrace these products and become a master of them in their market because it allows you to differentiate yourself from everyone else, right? Yeah. It allows you to tap into the builders, the developers, the high income, high net worth. One thing that we didn't talk about, realtors, a lot of them own their investment properties, right? So if you educate them on these type of products, they're like, I've never heard of a DSCR loan. Can I use that for my own, investment? Can I use them to purchase, investment properties or refi to take cash out to go do more deals, right? So we see a lot of originators actually educate the realtor community about these products, and it's turning into deals, not because the realtors have borrowers, but it turns into the realtor has their own deals that they want to do. And then, here's an interesting fact. I always talk about being strategic and being tactical, right? Time is important. How do you use that and how you grow your business as, is important. And I see a lot of originators make a mistake of just, a shotgun approach, just reaching out to all their realtors in their market, trying to meet with them for coffee and, do, lunch and stuff like that. And what's interesting is that the top 5% of realtors in the United States, top 5%, realtors or realtor teams control 90% of the listings, the top 5%. So what happens is the reason half of the LOs in the United States aren't doing any deals is because they're calling on the bottom 95% of realtors that only have 10% of deals. And usually the top 5% of realtors, the guys that are moving weight in real estate, the top 5% of realtors, they have two LOs that they've worked together for the last 10 years. They work with Tom Davis and they work with Michael Vandi because, you know, we're their trusted mortgage originators and partners for the last 10 years. Now, if Mike and Tom don't have expertise in non-QM or non-agency, and let's say a loan officer comes in and says, hey, I know you work with Tom and Mike and you have great relationship, I get that. They specialize in the agency products. I have expertise in non-agency, and I could help you grow your business by 25% because 25% of the market today is non-agency. I can help you with self-employed people. I can help you with investors. I can help all your past clients to have equity to cash out to go buy more investment properties. I can help you, tap into the builders, the developers. Like I have construction financing for projects up to 15 million. I could, if you introduce me to the builders, I could actually finance the project, and now you could be the listing agent. Right. So having what these products have allowed originators to do that don't have relationship with the top 5%, we educate and we train our originators and our partners to leverage these products and use them as a way to penetrate the top 5% of realtors who actually have the deals. Mm-hmm. Right. So, and that's been a massive success for us because our partners we're teaching them how to penetrate the top 5% of realtors. We're teaching them you should be a part of the investor community. Go to these investor meetups, the RIAs in your market, right? South Florida, we got 5 investor clubs, right? Like I have LOs and I go to these events with the LOs and we present on investor solutions and we talk about the full suite of investor solutions. And those investors, once again, do 5 to 7 deals a year on average. If there's 20 in there, right? Imagine how many borrowers I would have to go chase, that are purchasing a home versus the investor community. And if I have a full suite of investor solutions and I'm an expert and I can provide a one-stop shop for these guys for their investor financing needs and use leverage to grow their portfolios, right? That's a different approach than your average LO is taking today, right? They're taking the LOs that are embracing in non-agency and non-QM. They're actually thriving in a really challenging market, right? And so that's what non-agency and non-QM allows you to do.
Yeah, you touched on a few things that I want us to talk about before we wrap up here.
Yeah.
Referral opportunities, and we'll wrap up with the tech conversation, how tech's helping non-agency. But referral opportunities, you talked about the whole realtor education, going up to meetups, doing investor meetups and things like that. I feel like a lot of people are aware of that channel, that realtor channel, that realtor opportunity. Are there any other alternative referral opportunities that you would advise LOs take advantage of?
Yeah, one thing, Mike, I'm really an educator that happens to be in sales, right? I've always been an educator. I just happen to be in sales, right? And so I would say there are plenty of opportunities outside of the realtor and traditional referral sources. I would say we do probably 150 webinars a month on the products and how to source these products. One of my favorite webinars is sourcing the non-QM borrower, right? So for example, self-employed people. Where do self-employed people who do they do their taxes with? CPAs and accountants, right? I would go to every CPA and accountant in my town and I would say, hey, I specialize in helping high income, high net worth, self-employed people who you help optimize their tax strategy. They don't have to change their tax strategy. I have solutions to help them qualify for purchasing of the home, for taking equity out to fund their business, whatever the case it may be, right? So that's one. Financial advisors. Financial advisors, like in non-QM, there's a product called asset utilization. You don't have to deplete the asset, it's asset utilization. And a lot of these local financial advisors, guess what? If they don't have a mortgage arm, the last thing they want that borrower to do is go to Chase or Wells, and Wells say, if you move assets over to us, we'll give you a really low rate because you're moving assets to us. So financial advisors are great for referrals. It could be real estate attorneys, the title companies, going back to all your title companies saying, hey, who are all the cash buyers in the last, year? Who are all the investors, right? I have these products that could help, them do more deals, which means you make more money and more closings, right? There's, the list goes on, right? Business clubs, chamber of commerce, local business bankers. Like I said, we have a full webinar series around sourcing, these type of borrowers. But there's all these different alternative ways and referral sources that originators that we see originators kind of leveraging to grow their business. And what we've done is we've aggregated all this, right? Because we have 4,000 brokers, we have 500 bankers across the United States, and we aggregate all these best practices, and then we share them with our clients, and we say, okay, what market are you in? What kind of market do you want to penetrate? Let's talk about the opportunity. What areas are what opportunities are in your market that you're not penetrating? All right, let's build a business plan. Let's train your group. Let's do some training. Here's some white label marketing, flyers. Let's actually, if you need help and you don't feel comfortable presenting this stuff, we could actually white label the presentation where, Mike's on the LO on the call and I'm on the call with you. They never know that Tom is at Deep Haven. They think Tom is Michael's trainer, and you kick off the call, and then I talk about how to grow your business with these products. So we do a lot of white label presentations. Once again, it's hand-to-hand combat, right? So we have a lot of these different referral, sources outside of your traditional that can help you grow your business. And so that's one thing we do a lot of at Deep Haven.
It sounds like you guys have built a full-on operating system to help brokers and LOs take advantage of this non-agency opportunity.
Yeah.
I want to ask you, what are some of the other tech things that you've put in place to help these LOs tap into that opportunity? Rate sheets and stuff.
Yeah, so you've seen bank statement calculators, you've seen all the pricing engines. We have a quick qualifier pricing tool. But what I'm really, really, really bullish about is our digital HELOC. It's our own tech that we built. We're the only investor in the market right now that allows to $1 million jumbo HELOC. And we allow for self-employed borrowers where we can calculate the bank statements. We will even allow for an appraisal to look at the valuation. Some of the tech out there doesn't allow you to do that because it's blockchain, so we have some manual off-ramps. And once again, we talk about the generational opportunity, but think about, and what's nice about our tech, we actually have a white label solution, so you can actually have your company name, your logo, your colors on there, and it's our tech, and it looks like it's your website when they do the application. If I'm a loan officer and we're seeing mass adoption across our approved customer base, we are seeing our clients take that tech, their personalized URL, and sending it to their clients, their past clients, saying, in their marketing, providing drip campaigns around renovation, around debt consolidation, around how to leverage equity to the investor. So the digital HELOC is something that I think is very unique in the marketplace. In the non-agency, we're one of the only non-agency investors that have their own digital HELOC. And I think, with rates being elevated right now and staying elevated, the cash out game is sidelined. The cash out game is equity. And this is a great way for an originator to originate loans and stay in front of their past clients.
That's phenomenal. I feel like this has been a master class in non-QM and non-agency. I have a whole page of notes.
We're just getting started. Right? We have to do part 2 and part 3 and deep dive into these opportunities. This is all just high level.
Oh yeah, 100%. How can folks reach out to you, Tom?
Yeah. Well, first and foremost, thanks again, Michael, for having me. It's an honor and a pleasure to be on here, and thanks again. It's easy to get a hold of me. Once again, Tom Davis. I'm the Chief Sales Officer at Deep Haven. You can reach out to me via email at tdavis@deephavenmortgage.com, or you can just go to deephavenmortgage.com and connect with us there. And we'd love to partner and talk and see how we can help you grow your business.
Tom, thank you so much for coming on the podcast. Appreciate you, man.
Thanks, Michael. I appreciate it. Thanks for having me today.
Awesome.